Hey guys, it's Adam. I'm back here with another video. It's going to go over today's market and also why I took a trade. Actually, a few trades you'll see here. And I'm also going to go over some projections. Not financial advice, but let's get into it here. So based on price action, you can see that I took break even here from this morning. Just like a small partial and then a break even. I was looking to make a few percent on a move down towards this low. You can see the TP levels right within here. And also this trade I took up within this area. The entry was not great based on the broker I'm using now. I did not have a great entry based on the spread because I actually entered a little lower, but entered me right here. Whatever. Anyways, price came down, hit me out right down within here. And then price ended up coming back into this area, took more buys, partials, and then the rest hit break even. So that was a pretty good trade. Automatic CP was like all the way up in here, but I'll go over that and everything within the price action from today. But we're going to go over what we can possibly expect going forward. So if you want to see the review from today, just fast forward a little bit. But anyways, this is what I'm looking at going forward. We now have bearish rejection from this weekly volume imbalance that we have right within here. So what did we hit? We hit higher time frame liquidity. So this is external liquidity. If it wants to go bullish, we will see bullish movement for price to reach up above this high into this rejection block as well and possibly up in there. But until then, we're not really seeing that right now. We're seeing actually rejection. So we took the liquidity, now we're rejecting. Now we want to see if price wants to come down below this low and give us some more bullish rejection, or does it want to come up higher in this city that's from here to here in this daily fair value gap to then move price down below within here. So I'm going to be monitoring this area. If price wants to just hang out here, go up on in, tap up in, maybe comes down tomorrow, or if we come down tomorrow down below this low, if it wants to get some bullish movement. We also have a daily volume imbalance here. So I'm going to go over a little bit more today on the ES futures chart here from the June contract. I have different markups on this area, but still keep in mind these areas, this volume imbalance here, this volume imbalance here. But we do want to keep in mind this sell side liquidity and also this buy side liquidity here from the previous day's high up into this range here as well. This city that's sitting up in here. So these are key areas for me. So what's it do when it gets up on in here? Does it go bullish, use the fair value gaps as support, or does it go bearish? Anyways, getting into today's trading, what did I see this morning? I saw that we traded down all day yesterday and all London session. So I'm like, okay, we might be going bullish today. So I'm going to look for rejection here to see if it wants to go bullish or if it wants to go bearish. But price obviously went bearish until the PM session, which the FOMC minutes came out. So I expected a choppier morning in the ES for the indices, but it actually did trade down, and there was a pretty good setup in my opinion. So we traded down below here in pre-market, and then we came up on in. Basically, we had SMT divergence with the other indices. So I'm actually going to go over to the chart here, and I'm going to show you exactly why this kind of gave like a clear setup based on what price does in the morning. So if you want to take your notes, this is going to be a little bit slow, might be a little bit longer one, but I'm going to give a good explanation of why price moves and how it did it, and how you can possibly implement this into like your trading, but not financial advice. You know, I'm not a financial advisor, but let's get into it here. So where are we? Let's go to the New York Open. So we have midnight right here, trades down, all down through, come back up on in, creating this move up within, and we traded back down, creating the SMT at these wicks. So higher high here on NASDAQ on the right, lower high on ES, okay, over here on the left. We trade down, create a volume imbalance. We come down into this range now, okay, and when we are in this range, where are we on NASDAQ, okay? So we notice how we came down, then we came back up on in here, and then we traded down lower. But we made a higher high here to get into the volume imbalance here on ES. So you see this volume imbalance here, tap up on in, and then trades down lower. But at the same time, we made a lower high here. So that's bearish SMT. We trade down below this low, okay? Now we have a bearish breaker, okay? And we should not necessarily see price come back up into that area because we have a new week opening gap, as you can tell right here. I have this area, 512. I actually changed it for my notes. So if I put that back on, normally it's white or gray, but this is like an area for a draw on liquidity. Price trades down to that area, and I'm looking for that area to be targeted. At the same time, when market opens, look at this. We make a lower high here, but on NASDAQ, we make a higher high and then more bearish SMT at these highs, trading down below the low. And as the chart I showed you earlier was right here, this is where I took the short on NASDAQ when it started breaking down. This wick up on in, the spread got me into a bad entry, but entry here. partials, break even, okay? I could have taken another trade once it started breaking down again in the 1 minute breaker. That's right here. That could have been another retest after we get the bearish closure below the inversion gap. So the inversion gap is this fair value gap here, breaks through, bodies close below it, and it's going to be used as an inversion. And we should not see price trade back up above it, or at least get candle closures back up above that. So based on price action into the morning session, let's go down to the 1 minute so we can really see it. You can really see how price is just really showing that it wants to come down lower. So bearish SMT here, trades down below, closes down on ES below this inversion, closes down below it right here, comes back up on in, testing the bearish candles here, and also within this fair value gap here in the 1 minute. We trade away again, and then we hit the new week opening gap right about here, and then we continue down lower through the range. But at the same time, I like the setup more on NASDAQ. So I took the setup here, the sell here, trades down, partials, comes back up on in, tests this inversion here, from here to here. Testing that inversion, we do not want to see it get closed back up above. So this is a BISI, trades back up on in, comes up on in, break even. Could have held the trade, honestly. Like you can see that we have bearish SMT again. These are all equal highs over here on the left. And this one makes a little bit of a higher high right here. This 1 minute wick trades down below. And then it has this inversion. This would have been another clear setup from here. Once this closed down below, right here, using this breaker, from here, stop could go right up above this inversion, right up above the opening range, opening price as well, targeting the 1 hour fair value gap, which I mentioned in my group chat. So if you're not in my group chat, let me know. I throw stuff in there just like based on like what I'm looking at. Nice little 2 to 1 versus 1%, or 2% right there. If you want to just go for 20 handles, it'd be, because that's what ICT talks about with NASDAQ, 20 handles. ES, we do 5 handles. Okay, so 20 handles here, about a 1.47 to 1. Okay, whatever. No big deal. You can make it a 2 to 1 if you do want to keep the stop loss. Ideally, you don't want to see it come up above here, but just to be safe. Anyways, takes it down to that low, and then we just consolidate. Don't take anything else through the rest of the session. But anyways, just looking here, what did it do? Came up on in, traded up on into the high of this range. So could we have possibly taken a position here? Yes, I would say. We break up on in, test down here, come up on in, using this up close, well, this down close candle as a order block to hold price to support it. Comes down and into this fair value gap and starts to trade away. Trades away from this area. At the same time, NASDAQ is coming down in the same area here. But NASDAQ makes a lower low in the 1 minute, but at that point we make a higher low here. We start trading up above this high. So it's like, okay, why would you want to take a buy there? Why am I even saying that? 1, 2, 3. Okay, so our liquidity is taken. We're in a higher time frame PD array. So if you see this blue box that we're in right now, this blue box is really a higher time frame daily gap. So that we're at the bottom of the gap right here. Higher time frame PD right now, we're looking for break of structure to get in sync with order flow. So order flow is now telling me that it wants to go higher. Now we're getting more bullish SMT on these lower time frames. Boom. It's looking like price wants to go take out the liquidity from everybody going short, trailing their stop loss. And we have an inefficiency on the 15 minute, which is this blue box, which it came up and traded into. And then we come up into there, and then we trade down on through, consolidate mainly through lunch. Nothing really too interesting here. I like to avoid lunch usually for the most part. I'll observe it if I'm able to, but most of the time I'm doing something else in my other business or whatever. Anyways, we trade back down on in to this range down here. Make a lower low here, but a higher low here on the 1 minute time frame, as you can tell. So bullish SMT within there. At the same time, we're making bullish SMT in the higher time frame. So we go to the 5 minute. You can see that we're making bullish SMT from this low to this low, because this low is making a higher low. Now we have wicks. These wicks, lower low, higher low. We trade up on in, use this high probability order block, no wick on it. Boom, trades up on in. After a market structure shift, trades up on into this range within here. We have an inefficiency here on the 1 minute, obviously, like we were talking about earlier. Actually, we didn't mention that. But trades up on in to this range, up into this inefficiency, and then consolidates. And I'm looking here, I get on the chart right before 2 o'clock, because that's when the FOMC minutes were coming out. I wanted to see more bullishness come in. So this is where you'll see me start to mess up here. So you can see back in my chart, I took a trade because I'm looking for buys to get up above this high here, specifically on NASDAQ. But I kind of messed up, all right? So I wouldn't even say it's a mess up. I just basically was wrong on my trade. Okay, I gotta remember exactly where I got in. It was up within here, I believe. It traded back down. I got back up and in within this range. Yeah, it was up within here. So I'll show you my explanation. I was looking for trades to get back up into that range. I wanted to see more accumulation, but we started closing down below here on ES. I'm gonna go over ES a little bit. We started closing down below this 5-minute inversion, as you can tell. So I'm looking at this 5-minute inversion candle. I'm drawing it out. That's why it's blue. So keep your eye on this when I go back down to the 1-minute time frame. Okay, so it's a very important level. I want to see price hold up above it and then continue higher. We didn't see it here. We didn't see it here. Okay, 1-minute time frame. We traded down below it, came back up on in, traded down below it again, and on the 2-minute, also the 5-minute closed bearish too, if you want to go back, rewind the video a little bit. So it came down, and we started retesting here. I wanted to see if price was going to continue down. It actually did. It continued down for 5 handles. So the low of this inversion, here, we would not want to see it break up above this inversion or this volume imbalance here on the 2-minute. This 2-minute volume imbalance should hold price. We basically come up on in, close on in, and then trade down below. And then we trade down below here. So we would have been in drawdown like 2, but then we're targeting 5 handles down below this low. 5 handles, and then potentially 10 if it wanted to go hit these equal lows down within here. Potentially 10 handles there, and maybe even farther if it wanted to keep going down. Obviously it didn't. It hit a higher time frame PD array. It was accumulating orders and then getting ready to go. But I was looking at price action here. I was too zoomed in on the trade. We hit this high probability order block, traded away, broke market structure above this high, and now I'm looking for my confirmations. So I'm looking here. We have the bullish SMT from here to here. So notice how we wick down here, but NASDAQ does not wick down into the same gap. And then it starts to trade up on in. So I entered on this trade within here. Spread got me in like basically at the peak. And it trades down below, and I had my stop loss right below this inversion gap, this blue box here. So this blue box, I believe, is a 15-minute on NASDAQ. If I'm not mistaken. Yes, it's a 15-minute inversion gap. So this 15-minute inversion gap on NASDAQ is very important. So we go over here to NASDAQ now. So NASDAQ, we didn't necessarily close up above it either. So I was kind of against, I guess you could say I broke my rules, but at the same time, I had confirmations of the macro sending price up higher to that range. So price then broke down below, took this low, and I was seeing if we could get more shorts in. At the same time, I'm just sitting here observing, watching price. So we have this fair value gap here. We tap up in on NASDAQ here, and we trade down. Tap this low, but we didn't tap the low here. So bullish SMT, break a market structure, and now we tap down on in here on ES, but we didn't on NASDAQ. And I started buying, and then I'm taking partials once we get up into this inefficiency above these relative equal highs right here. And then we got another target, was our next target, once you start seeing price rip on through. Let me go over this first. After this 5-minute candle closes here, there's another retest here on top of a breaker as well. Break up on in, we have this highest up close candle, using this as a breaker, draw it out, boom, 5-minute candle close right here. This next one tests down on into the breaker, boom, rocket ship off to the motherfucking moon. All right, go up on into that range, partials, and then trades up and in to the 15-minute inefficiency that we have here. This 15-minute inefficiency right here closes on up into it, barely misses the 50%. Maybe that's just no, 50% of the opening range would be right here. Yeah, never mind. Comes up into this range and then it shoots on through after. That was in the aftermarket. It just completely ripped on through. I was looking for these equal highs to be met, so I was actually holding a position for a possible another 1% to rip up on into there, but it ended up hitting me here at break even, because if it was going to go higher, I would not want to see it come down below this low here. I wanted to see it support the higher time frame PD arrays would be these order blocks. But I don't want to step in front of a train. Okay, I would not want to short right here. I have higher time frame targets for price to reach to. It's already going higher. Now I'm looking for bullish PD arrays to support price. And I'm looking over here on ES, and I actually took more trades on ES, but a lower leverage. I wasn't in heavy because I already had good profits from this buy here. So I risked some more of my profits after I saw price trade down into here. So I took a buy when it tapped this area here, come back up on in, came up down in here, closed here, came down and in, closed here, and I entered another trade after this rejection here. And notice the bullish SMT you see as well. So these 1 minute wicks, higher low, lower low, volume imbalance, order block, another volume imbalance here. Okay, we tap the high of the inefficiency here on NASDAQ as well, which is this red box, and we have this for a target, 50% of the opening range. We also have this as a target and also up within here. So very clear PD arrays that got price up into that area down here. Unless I left positions open that were a clear break even, I would not have taken any setup within this, none. Okay, this is not my time frame to entry. Even if there is a setup, it's not my time frame. But that's gonna wrap it up here. If you guys have any questions, let me know. Love you guys. Take it easy. Peace out. Stay safe. Not a financial advisor. I'm just a guy on YouTube that loves this shit. Peace out.